Right.
Now, getting into the bars and the restaurants, and you talk about different industries, does it matter who wins to you right now in terms of how you could position your portfolio going forward? Or is it, like I say, gold and Bitcoin are great investments no matter who comes in, just the environment for that, essentially
Sure.
spend more money,
Yep.
are fine. But is it going to change your current allocation now? Say if all of a sudden, they announce Trump the winner, right? Which would be a surprise right now. Would you be like, oh, wait, I got to switch things around? Or would you tell clients? Or is it kind of like, hey, I'm set up no matter who wins because it's going to be split in terms of, the Senate and.
So yeah, we try to come in a little bit in advance of this. What's interesting is on our trading portfolio, which is a long short strategy, the TDI managed growth strategy. Basically, we came into the last few months, 2 months, at about a 27% overall equity allocation. And that wasn't just because we're like, okay, we're nervous. No, it's because when we ran the screens, when we ran the fundamentals, when we did all the work to get to that point, only a certain number, about 22 stocks, came through the screen that met the criteria, which is no different criteria than it was, let's say, 9 months ago when 60 names came through. So I'm like, oh, well, hey, wait a second. When that happens, it automatically puts up on our antennas and we're like, okay, what's the rule? Well, the rule is you have this percentage of the portfolio based on these numbers, and therefore you invest that way. So we kind of sidestepped that last move lower, and we're not going to really put in a lot more emphasis into the market until we can find stocks that meet those criteria. On our other portfolios, which are more asset allocation oriented, our global allocations, we came in. Unfortunately, we did have a slight, very slight slant towards value on the large cap. So we still have the growth side, but we had a little bit of a slant to the value, thinking that there would be some potential for a reversion trade, which never materialized over the last year. But still, when I look at my portfolio, the composition of it, it's holding up really well. I do think that emerging markets will do better. I think that the value of the U.S. equities are a little bit overdone. I think that the potential for outside U.S. has some slight advantage, especially if, in fact, the dollar continues moving lower. If Biden comes in, I think that you can see better potential for inflation that gives us a trade in gold and silver, for example, possibly other commodities. Interest rates are going to stay low, it seems, forever and ever and ever and ever. Mm-hmm. So I think that housing and real estate is an interesting place to be. So we've set ourselves up pretty well. We'll probably do some tweaking after we get beyond, I would say, towards December, till we see who's actually in and what they actually put on the table, because who knows what that is. If they put a big stimulus package on the table that's enormous and it gets through, that's going to be really negative to the dollar. That will probably benefit some of the commodities, gold, precious metals, and the opportunity, depending on where we sit here with the yield curve, which definitely widened out over the last 2 or 3 weeks, that was really beneficial to the financials, will benefit the value side of the equation. Whether they're going to look to break up the big monopolies is another discussion. Whether they're going to bring on and be very big proponents of marijuana, for example, and we saw a couple of states get passed. I think recreational is 1 or 2. Mm-hmm. New Jersey, was it New Jersey? I think it was New Jersey that got it passed.
I know it was on the ballot for at least 2 or 3. Yep.
So we'll make some interim changes, but kind of we are set right now for a very highly valuated market that has the potential of teetering. For all sorts of reasons, whether it's going to be a shutdown, whether it's going to be a pandemic that spikes, whether it's going to be people providing themselves a self-stay-at-home order, being more clearly away from anything big box, leaning more towards a lot of the digital advertising, so kind of playing that side of the equation. I think that obviously there's going to be a desire for Biden to possibly re-enter the Paris Accord, roll back some of that. Also, a lot of renewable energy. So you have some of the EVs, the solars, some of the companies that supply some of that. So you got to look at where there's going to be, but I try to be ahead of this, not reactive.
And do you have any names that you think are going to benefit? And again, we're passing earnings season where, like you said earlier, over 83%, I think it was, of companies that beat earnings. This earnings are still down for so many of these companies, 20% year over year, but the bar was so low that, it's going to be interesting. And we still have lots of companies to report over the next week, so especially small caps. But what are some of the names that you look at? If you could share a few, and I know it's hard.
So I still think I still think there's an opportunity in this. in the names like that relate to health, but are virtual. So, you heard of Livongo and you've heard of Teladoc, but Amwell, American Well, that's a company that's really interesting. AMWL. It's an IPO that recently happened, I don't know, 2 months ago or so. In today's market, it was up, last I saw it, 11% today. Obviously, everything is screaming higher. But if we are going to have a change in somewhere and there's going to be a difference in the attack from the Biden and the next administration, and if we do see the continuation of this pandemic, I think that would be something that is going to really be taken in by a lot of companies. So you have that name. There's some other names. I mean, like, for example, Terminex is a company we like. They do, they're obviously, they have couple different sides of this company, but basically they have some cleaning and sanitation, but also they've been doing really well. Who else do I like? I didn't make the list. Oh, let's see if I got something over here. I got a list. I got a big list here. Let's see if I like anything else I can give you from this list. That would be interesting. You have to look at like your guns and question if those are going to be something that's going to be good, because there's going to be a lot of potential backlash in this administration with the guns. Let me get some greenies here. That would be good. Some of the pot stocks. I mean, you can look at MJ. You can look at Tilray. I think those are interesting. Sally Mae is a name that we hold that I really do like. I think that's interesting. If you have the mortgages expanding as we've seen them for some time, defense names, well, they're always going to go, be funded pretty darn well. So I don't think there's an issue with that.
Recently.
Yes, but again, that's because probably they thought Biden would come in and not do much. Some of your climate changes, you have, again, TAN is the solar ETF. I'll give you that as an example. You have the First Solars. We were just stung by a company. Solar Edge is the name of it, and we bought it a little bit below where it is now. Ramped up like 30%. Came out with earnings, beat the crap out of earnings. Although some of the revenue numbers weren't as good, and their outlook was pretty ugly. But this is kind of a company that's, I'll call it picks and shovels type of company involved in the solar space. And that could be interesting too. And then, the EVs are obviously, there's so many of them out there, some of the SPACs and all that is interesting to look at. I would consider for a long shot. Let me give you the long shot view. Okay. Two things. Planet Fitness, I'm still thinking, I don't have a position in this, but Planet Fitness, I just don't understand how they're going to survive. Okay.
Yeah.
But okay. It's getting to a point that is I think very shortable. Number one. Number two, I think if you want to do long shot kind of thing, look at the cruise lines. They're eventually going to be cruising again. I know a lot of people who are like, I'm ready to go. I'm like, oh, okay. But the cruise lines, I think, are interesting. They've been decimated. Norwegian, Royal Caribbean, Carnival, they all pushed out their cruising, I think, Royal till the end of this year. But when they do, and if they do start up, I mean, if you do, the CDC just cleared them for sailing. So I don't know how they did that, by the way, in the midst of all of this, but they did. There was some clearance there. But I think that you have an opportunity long-term in some of these. They have a lot of debt. They've done a lot of weird deals of selling some of their boats and all that, just like the planes and airlines sold like debt backed by their frequent flyer miles and debt backed by their runways and or their not the runways, the gangplanks. What do you call that thing that you attach to the plane, you walk through, the walkways, the breezeways, whatever those are called.
Yeah.
Anyway, so there's a good bunch of names. I mean, I think Apple, I think Facebook's going to be in some trouble. I always think that, though. I'm not a big fan of Facebook. It just came on our list, actually. Facebook, we like Adobe. Am I giving you enough names here?
Yeah.
I'm going to stop right there. I'm going to stop right there just so I don't get myself in trouble with a lot more.